Hey there, fellow investors. Ready to grow your money? Great. Investing can seem confusing. Don't worry, I'm here to help. Today, we're diving into the world of stocks and mutual funds. It's like choosing between a solo swim and a group pool party. Both can be fun and rewarding, but the right choice depends on your style. We'll break down the jargon, explore the pros and cons, and give you the knowledge to make smart investment choices. Whether you're just starting or a seasoned pro, this guide is for you. Let's get right into it. First things first, let's define our terms. Stocks, simply put, are like tiny pieces of big companies. Buy a stock, you own a slice of that company. Exciting, right? Mutual funds are a bit different. Imagine a basket filled with different stocks. That's a mutual fund. You buy into the basket, owning a tiny piece of all those stocks. See? Not so complicated. Understanding these basics is key to navigating the investment world. Now, let's dive deeper into how these two investment options stack up against each other. Stocks and mutual funds differ in key ways. Understanding these differences can help you make better investment decisions. Think of it like this. Stocks are like building your own burger. You have the freedom to choose exactly what you want. You choose the toppings, companies you want, tailoring your portfolio to your specific tastes and preferences. Mutual funds, on the other hand, are like ordering a pre-made burger. It's convenient and requires less effort on your part. Someone else picks the ingredients. Stocks, creating a diversified mix for you. Stocks offer more control but also more risk. You have the power to make decisions, but with that power comes responsibility. One bad patty and your meal is ruined. Similarly, one poor stock choice can significantly impact your portfolio. Mutual funds spread the risk across various investments. This diversification can help protect your overall investment. One bad ingredient doesn't spoil the whole meal. In a mutual fund, a poorly performing stock has less impact. Mutual funds are managed by pros. These experts analyze the market and make informed decisions on your behalf. They pick the stocks, you sit back and relax. This can be ideal for those who prefer a hands-off approach. Stocks require more research and attention. You are the chef, responsible for every ingredient and its impact. Both have costs, like trading fees. When buying and selling stocks, these fees can add up. Mutual funds often have management fees too. These fees pay for the professional management of your investments. Liquidity, or how easily you can buy and sell, varies. Stocks can be quickly traded, but mutual funds may have restrictions. The choice depends on your risk tolerance and how involved you want to be. Consider your financial goals and personal preferences. We'll explore the benefits of each next. Stay tuned to learn more about how these investment options can work for you. Mutual funds are like the all-inclusive resort of investing. Imagine being on a vacation where everything is taken care of for you. From meals to activities, you just sit back and enjoy. That's what mutual funds do for your investments. Professional management? Check. Instant diversification? Check. Less homework for you? Double check. With mutual funds, you get the expertise of professional managers who handle all the nitty-gritty details. Diversification is key to managing risk. By spreading your investments across various assets, you reduce the impact of any single asset's poor performance. It's like having a safety net for your money. Just as a tightrope walker feels more secure with a net below, you can feel more secure knowing your investments are diversified. Mutual funds, with their basket of various stocks, offer this right out of the gate. You get a mix of different stocks, bonds, and other securities, all in one package. No need to pick individual stocks yourself. This can be time-consuming and requires a lot of research and knowledge. Professional managers do the heavy lifting, researching and selecting stocks for the fund. They have the expertise and resources to make informed decisions. They constantly adjust the portfolio, aiming for optimal returns. This means they buy and sell assets as needed to keep the fund aligned with its investment goals. This expert guidance is a major advantage, especially for beginners. If you're new to investing, having a professional manage your investments can be incredibly reassuring. Mutual funds offer convenience and peace of mind. You can easily track your investments and see how they're performing without getting bogged down in the details. You invest your money, the fund managers take it from there. They handle the day-to-day management, so you don't have to worry about it. It's a great option for those who want to grow their wealth without the constant monitoring. Whether you're saving for retirement, a big purchase, or just want to build your financial future, mutual funds can be a smart choice. Section 5. Stocks. Unleash your inner Wall Street mogul. Ready to be more hands-on? Stocks offer the potential for bigger returns. When you invest in stocks, you're buying a piece of a company. This means you have a stake in its future and its profits. Remember, higher potential reward often comes with higher risk. It's a trade-off. You need to be prepared for the ups and downs of the market. The value of stocks can fluctuate wildly, sometimes within a single day. With stocks, you become a part owner of the companies you believe in. This ownership can give you a sense of pride and involvement in the business world. You might even get to vote on important company decisions. You're not just investing, you're participating in their success. That's exciting. Stocks offer flexibility. You can diversify your portfolio by investing in different sectors and industries. You can buy and sell whenever you want. This liquidity is one of the key advantages of stock investing. You can quickly respond to market changes and adjust your investments accordingly. You control your destiny in the market. Your decisions directly impact your financial outcomes. This level of control can be empowering and motivating. This direct ownership and control is a major draw for many investors. It allows you to align your investments with your personal values and financial goals. However, stock picking requires research, time, and a bit of a gambler's spirit. You need to analyze financial statements, understand market trends, and keep an eye on economic indicators. You need to stay informed about market trends, company performance, and economic factors. This continuous learning process can be both challenging and rewarding. It's not for the faint of heart. The stock market can be volatile, and you need to be prepared for the emotional roller coaster that comes with it. But for those who are willing to put in the effort, the rewards can be substantial. Section 6. Finding your investment groove. Mutual funds or stocks? So, which one is right for you? The age-old question. The answer is, as always, it depends. Consider your investment goals, risk tolerance, and how much time you're willing to dedicate. Mutual funds are great for beginners, passive investors, and those seeking diversification and professional management. They offer a smoother ride in the often turbulent market. Stocks are more suitable for experienced investors, risk takers, and those seeking potentially higher returns and more control over their investments. It's about being in the driver's seat. There's no one-size-fits-all answer. The key is to choose the investment strategy that aligns with your individual needs and financial goals. Section 7. Investing 101. Tips for every investor, big or small. No matter your chosen path, some universal investing tips hold true. First and foremost, know your goals. What are you saving for? Retirement? A dream vacation? This will guide your decisions. Diversification is your best friend. Don't put all your eggs in one basket. Spread your investments across different asset classes to minimize risk. Stay informed. The market is constantly changing. Read financial news, follow market trends, and stay updated on your investments. Knowledge is power. Finally, be patient. Investing is a marathon, not a sprint. Don't expect to get rich quick. Slow and steady wins the race. Section 8. The bottom line. Your financial journey starts now. Investing is an exciting journey, and you've already taken the first step by educating yourself. Remember, There's no right or wrong answer when it comes to choosing between mutual funds and stocks. It's about finding the right fit for you. Whether you choose the ease and diversification of mutual funds or the excitement and potential of stocks, remember to invest wisely, stay informed, and most importantly, enjoy the ride. Your financial future is in your hands. Make it a bright one.